Hello, it's Nicolette again. So today on Lesedi FM, I made a mention of something very, very important, and I spoke a little bit about investments and savings and debt, right? Now, I would like to clarify why for me it is not recommended to be looking at any type of investment if you are having very bad debt. And now we have to classify what bad and good debt is. Bad debt is debt that is not buying any equity or any assets, and basically you've received that debt at a very high cost, which means that it's a very high interest loan, short-term type of loans, loans that you take out to throw parties, loans that you take out to go to Durban July. That's what we call bad debt. Good debt is debt that you use to buy assets, because sometimes you can actually create wealth through debt, but we call that good debt. And let's also be very clear. Living expenses, your monthly living expenses, cannot be classified as debt, but you do need to be able to account for them every single month. The moment you cannot account for them and they go into arrears, for instance, let's say something like rent, if you cannot pay your rent, if you cannot pay your bond every single month, it then goes into a space where you are in arrears and you start attracting some sort of interest. Now you are in trouble. Right, so let's classify that first, right? That's first things first, say first. The second thing is that let's talk about savings. You do need to save, whether you're in debt or not, because when it comes to savings, you need to have short-term saving, you need to have mid-term saving, and you need to have long-term saving, right? Now, your long-term saving usually is in the form of investments, right? Now, short-term saving is having an emergency fund. Now, that is very, very important. You need to have some sort of emergency fund so that if something happens and shit hits the fan, you've got somewhere to go and be able to withdraw some sort of money so that you do not go back to those short-term loan guys and borrow more money and increase this bad debt. Now, it's also very important to understand for me that you cannot be looking at investments if you are in debt and you've got bad debt that's kind of spiraling out of control. And let me explain to you why. And we're talking about the average man here, right? Now, the average man will probably have, if you are in debt, it means that you don't even have more than 5,000 rand to be investing anyway. Because if you really had a disposable income of 5,000 rand, there is some debt that you should be getting rid of, right? Now, if you've got disposable income of like 5,000 rand, you should be looking to use that 5,000 rand to pay off your debt, your bad debt, your short-term loans, your clothing accounts as quickly as possible, so that you then have or create a new disposable income. What does that mean? Let's say, for instance, you're paying 1,500 rand every single month to a clothing account, right? Now, let's say you've got 500 rand every single month to save or to invest, to actually invest. If you take that additional 500 rand that you are going to invest and pay into your debt and quickly finish off that debt, which means that you decrease the interest that you pay, because now you're paying more than the installment that they have instructed you to pay. You now finish off that debt as quickly as possible, number one. For a debt that you are going to finish in 6 months, you now can finish it in 3 months. That's number one. You also lower the interest that you pay, because now you're paying at a certain time and you're paying additional money, which means your interest also, it becomes a little bit lower. You now get to finish this thing as quickly as possible, right? Now, instead of 6 months of you paying 1.5 to a clothing retailer that you owe, you pay in 3 months, you pay 2,000 rand, and you've got an additional 3 months that come where you can start investing. So it would make sense for you to be able to get rid of all your bad debt first, because bad debt will erode your savings anyway. That's number one. That's one thing I want to clarify. The second thing I want to make very, very clear is that, there's 3 things actually. The second thing I want to make very clear is that when you are looking for investment vehicle, you need to be very aware of tax implications, number one. Number 2, of administration fees, because these things could potentially be what's killing you. And number 3, inflation. Inflation can become your worst enemy. How does inflation basically work? It means that 500 rand that you've got today will not be the same 500 rand 5 years later. In other words, this 500 rand of today will not buy the same things that the 500 rand of 5 years later will be able to buy. 500 rand today might be able to buy you bread, milk, and some sausage. 500 rand 5 years later could probably only be able to buy you bread, because that's what inflation does, right? So it's very important when you are saving money and you want to save money for the long term, banks usually are not the best place unless you're looking at a money market account that has an interest rate that will beat inflation. But again, if you look at even a money market account, the inflation, the rate of inflation and the way inflation is growing in this country, plus the administration fee and the bank fees, it really does not really give you great real returns, because that's ultimately what we're looking out for. We're looking out for the real returns, and that's what's important. That's what you need to look at. So remember, recap is, if you are in debt, rather finish off your debt first. But again, we're all grown-ups. We're all grown-ups. We all can do whatever it is that we want with our hard-earned money. So remember that I'm not here to give you any financial advice or any type of guidance. I'm just saying, start thinking very differently when it comes to these things. That if you are looking to invest, make sure that you've cleared out all your bad debt and you're now dealing with proper, stable, standardized living expenses that you can manage, even contractual debt that you can manage. But the moment it becomes bad debt, short-term loans, things like clothing accounts, rather get rid of that first and then take that disposable income plus the amount of money you're going to pay your debtors and invest all that money. You're now investing a little bit more money. You can, demand better returns, and your money might just yield better returns. Number two, if you are going to be looking for an investment vehicle, remember that it's very important that you look at the tax implications, because that alone can erode your amount of money. And then also the second thing you need to be looking at is administration fee. If you're going into a fund, look how much it's costing you for the fund manager to actually manage your money, because these people don't do it for free, hey? Just so you know, they don't do it for free. And then the third thing that you need to be very, very cognizant of is inflation. And bank accounts usually are used for short term, because inflation beats what the bank is going to be giving you. Besides, banks are not really out there to try and make you money, to be honest. You basically give them money and they use your money to make more money. So they're not trying to take out any more money and give it to you. So it's very important that you look into things that are beating inflation. And also the last thing is, please invest in things that you understand, so that you don't find yourself in a situation where you are asking why you didn't make a certain amount of money, because this is what was promised to you. Make sure that when you are investing, you are clear on what it is that you're investing into, how much is the interest rate, what is the actual real return after the deductions of whether it's tax, whether it's administration fees, whether it's inflation. Understand what the real returns are, so that you understand and your expectations are a little bit managed. And yes. All right. Bye, guys. And remember, for more of my videos, you can follow me on Facebook. The page is called The Financial Literacy with Nicolette Mashile. Financial Literacy with Nicolette Mashile. I'm happy to help with any financial education stuff. But remember, I am not a financial advisor. I'm not a financial, I cannot give you financial guidance, because at the end of the day, it is your money. And if you want to get financial advice, I would suggest that you go and look for a financial advisor that has your best interest in heart. How do you spot those people? It's the people that put financial education way before their own commission. Mwah!